This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on another fresh edition of Bazaar Morning Call. We're starting a fresh new week, Monday morning. The skies have darkened over Mumbai. I think that's the big headline that we're going to talk about here over the next 2 hours or so. Monsoon rains. I am Prashant. With me, my colleague Sonia and Nigel. Guys, hi, morning.
Hi, morning. Good morning. It sounds so ominous, when you say that. It's actually such a pleasant sight, right, to wake up to the monsoons. And of course, it was really stormy Sunday. I mean, you had all those cyclonic feelings. But then the IMD coming out and saying that the monsoons have begun officially. The progress is good. It's my favorite time of the year. I don't know about you guys.
Well, I'm going to... I'll discuss this later, but I'm going to be somewhere during rains to experience rains, monsoon rains. So my favorite time of the year as well. This part of the country, absolutely.
What a fantastic weekend, right? Sporting weekend. Djokovic, supreme. I mean, that semi-final that we look forward to on Friday, it didn't disappoint for the first two sets, but Djokovic, I mean, in a league of its own, and the cricket action, I think we'll keep that on the back burner.
When you said amazing weekend, I was just thinking, okay.
Let's not talk about that.
Not too great in cricket.
French Open was...
The French Open, I caught the first two sets purely by chance. And then I had to go out. And then I was getting scores on my phone. And it was nothing. I mean, the first two sets basically was the match. And then the next two sets went on very, very quickly in the next 1 hour or so. And then, of course, the final was... I don't think anyone really expected Casper Ruud to win. Yeah. It was all Djokovic all the ways. And that's essentially what has happened. 23rd
in an era where you have Federer, and yet you get 23 Grand Slams. I mean, it's Nadal and Federer in the same era, and yet you're winning 23 Grand Slams. Kudos to that.
Two more than Federer, one more than Nadal. So it's quite something. Well, we've got lots to tackle. It's a new week, and let's sort of get you up to date with what you need to know as we start another new session. So we are coming off after 2 days, that is Thursday and last Friday, which saw some pullbacks. I mean, the pullbacks were not large, 1 to 1.5%. This comes on the back of a very, very feverish rally that we had in the past few weeks or so. So some amount of pullback is what we've seen. Just to put the feverish rally in context, in the last 2 months, including this Thursday and Friday sessions, the mid-cap index is up 17%, the small-cap index is up 20% or so. So it's been very, very good going, and sometimes you do get things starting to slow a little bit, which we saw. Global session is nothing to talk about on Friday. The Nasdaq was up about 0.16%. By the way, technically, the Nasdaq composite, that is above the August 2022 highs. So purely going by charts, there are more upsides coming, even for the Nasdaq. But we'll leave that for a later time. The big cue, which will set the tone going forward, is the consumer price inflation number. It's the final key trigger before the FOMC. And the FOMC, in terms of market pricing, is basically a coin toss, 50-50. Enough number of people expecting a pause, and on the other side, enough expecting another 25 basis point hike as well. I mean, it's actually not really clear. Maybe the CPI number will give us the final clue. So CPI is on Tuesday, and then FOMC comes up on Wednesday, which means that for us, the Fed reaction will be on Thursday morning. As always, I mean, decisions usually come on Wednesdays. So that's the cue. Maybe, the global markets also perhaps go into a bit of a holding pattern before we, till the time we finally get the decision. So this is the really important one you need to watch out for. On the Nifty, the support levels are about 100 points away from where we left off on Friday. We left off at 18,563. The important supports come in at 18,464 to 18,500 kind of zone. The very near-term support level, this is the number we put out last Friday as well. SGX, by the way, is indicating a higher start, and I'll get to that in just a bit. But on the upside, Thursday's high, it's a bit of a swing high. 18,778 is the number which needs to be crossed for, eyes on the all-time high level, which, of course, has been elusive so far. The Bank Nifty closed exactly at the 20-day moving average. 2 points off the 20-day moving average on Friday. It's had several touch points of the 20, but so far it's defended it. So the support is at the 20, which is 43,987. We closed at 43,989. That's how close. And then after that, the swing low of 43,706 will also come into picture. These are supports for the Nifty Bank. And on the way up, the Bank Nifty needs to take out, as we've been saying, 44,500, which is the swing high, which has not been able to over the last at least 2 weeks or so. So, that's the setup. Those are the levels you need to know as we start another session. The SGX will come up on your screen as well. It's indicative of a 70, 71 point start. I mean, I think after last 2 days of a price action, let's see if we do get the 70-point uptick. But if you do get, don't chase the move. Wait a little bit, at least watch the first hour or so. And it's happened so many times. The 70 point becomes 30, 20, 25 points, and then you get the move. So I think prudent to watch the first hour in terms of what the market wants to do, and then decide how to go in. You've got the levels in terms of near-term trading levels to watch out for. Sonia.
Oh, absolutely. And, every time the monsoons begin, the market sort of gets into the green. I mean, it's great, right, for the economy, for earnings, for crop price, for crop output, etc. So this is, of course, a big cue that the market is watching as we begin trade this week. The monsoons have now entered Maharashtra, and the IMD said that the progress is quite satisfactory in terms of the initial tick on the monsoon. So that's a big positive. A lot of events stacked up, as we were telling you. There's, of course, all eyes will be on the US FOMC policy that begins tomorrow, the outcome of which will be known on the 14th of June. There's a pause this time around, so not too much expected over there. There's the ECB meet on Thursday, and there's the Bank of Japan meeting that concludes on Friday. So it is a hectic week in terms of central bank meetings. So we'll keep our eye out on that. Apart from that, the US markets have actually had a good run. Of course, on Friday, they closed absolutely flat in anticipation of the inflation data and the US Fed outcome. But in general, the S&P 500 posted its fourth straight week of gains. The Dow has been trending higher. So in that context, Wall Street has been doing pretty well. For our own markets, this 18,600 level has proven to be a bit of a sticky zone for a while. We closed lower on Friday as well. Foreign investors sold about 300 crores in the cash markets, while DI has bought about 1,245 odd crores. Now, a couple of things. The mid-caps continue to be in focus. CLSA put out a note, and we'll talk about that in greater detail, where they said that there's a further 13-14% increase that they're expecting after the recent breakout that the mid-cap index has seen. So keep your eyes peeled on that end of the market. And in terms of local cues to track, there is the April IIP and the May CPI data that comes out at 5:30 p.m. in the evening. So those are the macro factors. By the way, talking about macro cues as far as the Fed outcome is concerned, Nomura put out a note where they said that the Fed's hawkish pause is something that is unlikely to dampen the market spirit. So there's a pause. It could be hawkish, but it's not going to affect the market needle too much. So in that context, a lot of things to watch out for. But today, just for today, the morning looks like it's going to be a good start.
Well, that's right, Sonia. And with the onset of the monsoon, besides all the factors that you mentioned, it's good for the economy, good for prices, etc. It was getting too hot, so I'm quite happy to see the monsoon. So let's hope that picks up as well. But in terms of the Nifty, well, we have been consolidating in a bit of a range, which is okay. And we've come off a little bit from the top, but we're holding on to the 20 DMA. So I'll say that, in fact, that uptrend is pretty much well and truly on. Global markets are in wait and watch mode. We have the big Fed outcome that we'll get in the next couple of days, so we'll wait for that. But the positive news, at least overnight, is the dollar index. It's a little bit weaker than what it was on Friday. And also we had crude oil prices that came down a little bit to around $74 per barrel. Those two are tailwinds from an Indian market equity perspective. What happened in Friday's trading session? There was some unwinding of long positions, both on the Nifty and the Nifty Bank. It perfectly ties in with what happened with regard to the FI data as well. The unwound closed on 7,000 long positions. Now the short positioning has moved around 54%. Getting into the event, you like the short positioning to go up, because if the Fed governor, if he delivers what is expected, maybe you have enough ingredients in there for a bit of a short covering bounce. On the index option side, the FIs are buying more calls than puts, but they're writing calls. So telling you at higher levels, they're expecting to see some bit of supply that comes in there. So let's pull up a couple of those strikes. 18,600, 18,700 call, both of them, between them, they added close to around a crore shares on. So there was aggressive writing being seen at those levels. And if you're pulling up the 18,700 call as well as put, you'll see that there are way more number of calls that are written in comparison to puts. So the markets are not expecting us to get above that 18,750 odd mark. Any kind of positive news comes in there, that'll get, the bears will get surprised on the positive side. Let's focus on the PCR. A few sessions ago, we were talking about the PCR moving to the upper end of the band of around 1.4. And we see the markets come off normally when we move to the upper end of the band. Now we're closer to the lower end of the band. So that's why buying the dip will be something that, you could look at for today's trading session itself. Let's pull up the levels you're looking at. The 20-day MA, that's a line in the sand, 18,450. Till we hold on to that level, you're saying that those all-time highs, they're within kissing distance, and we should get them. Resistance levels is from where we did a U-turn last week. The Nifty Bank, it closed at the 20-day MA pat out there. Last 10 sessions, it's been in this range of close to around 700 points. The lower level that we're looking at is 43,700 because that's the lowest level we've seen in the last 10 sessions. The 20-day MA, that's where we are at. So the SGX Nifty suggesting a 70-point gap up. I think that's a no-trade zone. But intraday, you could look to buy the dip. Hold on to that 20-day MA as your support zone or your stop loss and hope that the markets rebound from there. But don't chase the gap up is the advice that's coming in today.
Right, well, before we go any further, let's quickly tell you what's lined up in the first half hour of the show. We get you updates from across the globe. Lawrence Blanco of CLSA will be making an appearance, in a bit from now to discuss levels, mid-caps. That's the big call from Lawrence. Our research team will get you CNBC TV 18's list of top 10 stocks for the day. At 8:30, we do a fundamental stock analysis. Prakash Devan will be helping us with that in just a bit.
All right, well, let's get you some views then on the market. We begin first with Chetan Seth of Nomura, who says that the Fed's hawkish pause is unlikely to dampen the market sentiment. Recent negativity towards China should ease, given rising expectations of some property sector easing, PBOC rate cuts, and the US Secretary Blinken's visit to China. Our poll questions during the recent Nomura Investment Forum Asia conference threw interesting results. In India, 41% of investors think of the upcoming elections as the biggest source of uncertainty for Indian stocks, and only 5% polled no concerns.
Okay, let's get you some money market views as well. And the rupee B. Prasanna of ICICI Bank says the worry about a renewed inflationary trend resurfaced with rates repriced higher after Bank of Canada resumed hiking rates after a 5-month pause. Dollar shed some strength as softer weekly labor data in the US and recent commentary from officials indicate a pause in the upcoming FOMC. FPI inflows and RBI's intervention have led to the rupee to trade in a range with an appreciation bias, even though weakness in Chinese yuan continues. Prasanna expects the pair to trade between 82.1 to 82.90 to the dollar range this week.
All right, and on the bonds, B. Prasanna says that the global bond yields inched higher as continued strong economic prints led to further impetus to the risk of a hawkish outlook and at least one more hike from the Fed. The RBI's MPC2 surprised markets by a hawkish pause, resulting in local bond yields moving higher. Inflation for both US and India is expected to soften this week. However, expect the markets to trade cautiously given a continued supply and expected decline in systemic liquidity. He expects the 10-year benchmark to trade in a range of 6.95 to 7.1%.
To track for you, and we get to that in just a bit in greater detail. But for the time being, let's list out all the stocks we're tracking for you. JSW Steel, Tata Steel, Lupin, Maharashtra Seamless, Lloyd Steel. You have Titagarh Wagons, Kochi Shipyard. Their stocks on the back of positive news flow. On the flip side, you have Divi's Laboratory, Loris, as well as Go Fashion that could be reacting to negative news flow.
Okay, well, those are stocks on your radar, on our radar as well.